So quickly, let's talk about one of the biggest losers for today, and that is Shopify. Shopify is down 19.7%, pretty much 20% on the day. It reported earnings during today's pre-market session. As you guys can see, we had Uber, Shopify, Affirm, all reporting earnings, and guess what? What's one thing that they all have in common? Well, Shopify, Uber, and Affirm have all sold off. Affirm actually was a little bit on the green side of things, but then ended up selling off into the normal trading hours. It looks like it's testing support, so we'll see if we get that reversal. But Shopify is down pretty bad. Now, we're not really showing signs of continuous progress. It looks like it's pretty much just trading sideways. It's already down a very significant amount. I mean, it's lost 1/5 of its value. Very, very significant. But why? Let's go ahead and talk about it. Its overall earning report came in better than what was expected. Its EPS was beat. Its revenue was beat. But guess what? Its guidance was off. So pretty much what it shared was that its guidance for the second quarter was less than what Wall Street expected. Shopify said that second quarter revenue growth slowing to a high teens % rate year over year. So again, I've said this once and I'll say it again. Earning report is very important. Its guidance for up and coming quarters is often more important. You can see that it could exceed expectation, but if its guidance is off, it can lose nearly 1/5 of its value. Absolutely insane. One of the things that I also wanted to talk about is one of the trades that I want to plan to take. So again, I'm just sharing you with my trade plan, not something that you have to agree with. It's not something that has to go according to plan, but I just wanted to share it with you guys. I just shared it with my LPP team. So this is a Snapchat short. This Tesla short was just an example, but the Snapchat short, my desired entry is $16.90, which is right around the general price point that we're at right now. The target is $16 and the price to cut losses on is 17. This has a 9-to-1 ratio. So meaning that, again, my goal is to enter at the current price point we're at right now. And the goal to take profits is at $16, which is, again, based off of the pre-market sell-off that we had. Not far off, right? So we could see that it offers around 5.34%. And then obviously cut losses if it breaks above $17 per share. So keeping a tight stop loss and obviously big downside. So once we do get confirmation of this thing breaking below EMA, I'll actually begin to add some size into this trade. As of right now, there's no reason to, but again, if I do this with 20,000 shares, I can walk away with $18,000 in the green. And if this thing does not go according to plan, then obviously if I have my full position size, I could potentially lose $2,000. So just something to take into consideration. As of right now, I only have 1,000 shares into this position, not 20,000 shares. So I'm just waiting for confirmation of this thing to break below EMA, and then I'll actually add some more size. If it never breaks below EMA and then begins to run up, then I'll just manage my risk at $17 with the 1,000 shares, which obviously is significantly less. It's going to be like a $50 or $60 loss or something like that. It's not going to be very significant, but overall, just wanted to keep you guys up to date on what it is that I'm paying attention to today. You might be asking, well, what caused this selling pressure? First off, Snapchat has been on a consistent green streak for no reason. I mean, ever since it reported earnings, it has not had, I don't think, one red day. Higher highs, higher lows. It's extremely overbought. And again, just because it's overbought doesn't mean that it has to pull on back. Don't get me wrong, right? But it has not pulled on back. And then today, the news that it shared was that Snapchat raises $650 million via private placement on senior convertible notes. So pretty much they have to pay off some debt and they had to raise some capital. So they decided to do this privately. And obviously, that's not the best look for Snapchat because now they are adding more debt to their balance sheet. They have to pay off some debt that's due in 2025 and 2026, to my understanding, according to the article that I read. And then this note is not going to be due until 2030. So pretty much they're adding more debt to their balance sheet, but obviously to pay off other debt. Now, this obviously isn't something that would be viewed as a positive catalyst, but somehow Snapchat is making its recovery. So again, I'm going to stay patient. I want to stay calculated. I want to wait for that confirmation to then really add some size, and I'll keep you guys up to date if I actually end up adding more to this position. If not, then I'll just stay with the 1,000 shares that I currently have right now, which is about almost $17,000 shorting Snapchat. I'd love to have, again, closer to $300,000 shorting Snapchat, but I need direction to be in my favor. And remember, We can all plan out these trades, but they mean absolutely nothing if first, we don't get confirmation, and second, if we don't actually take action. So very excited to follow up. I hope that earned your thumbs up. And remember, I'll keep you guys up to date on the biggest winners and the biggest losers in the stock market. All that you need to do is drop a thumbs up and subscribe to the channel, and I'll take care of the rest. I do go live every single morning, and if you're a complete beginner that learns best by watching other people do, I'd love for you to tune into my live sessions. You get to see all of my good and all of my bad trades, but you get to see it all happen live right at market open. If you ever want to tune on in or see what it's like, it's the second link in the description down below to learn more. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.